Good evening, traders. This is a DAX recap video for December the 27th. In front of us is the chart that was posted before the open, and as we can see, main resistance zone, which is this 685 to 705, was tagged in pre-market, and that was pre-market high, and pre-market low was around 10,600. So this was the pre-market range. Unfortunately, at 6:30 they tagged this, not in regular trading hours, and later that was the high of the day. What was the sentiment before the open? I said something about that in my morning notes, and this was the closing price of yesterday for the S&P, Nasdaq, and Russell. It was a huge up day, and then I said in the morning notes something about this main support and resistance zones, and that in this kind of environment it's hard to say when market is exhausted. You know, when market makes a move like 5% to the upside, you really don't know, is it exhausted there, or can it go like 6% to the upside like Nasdaq did. And basically the same situation we had today on DAX, but in the opposite direction. I was wrong here. I said not the case with DAX. It has a pause, a bigger pause than the S&P, and I was expecting it to stay in his usual 200 points range, meaning that if it goes to the downside, my thinking was this zone could keep the downside, or this zone here could keep the possible upside. But it wasn't really played like that. As we can see, DAX made a huge move today, range extended to the downside, more than 400 points to the downside. So where was the opportunity for us? Now I will push this chart here and go like time was running. So this from between these two vertical lines is the pre-market from 1:15 to 9 a.m. This is pre-market, and this was here tag of this zone at 6:30. And then even in pre-market, price made a bounce from cash close. And when price do that, it's a good practice to make some kind of note of that, draw some box or whatever. Just keep in mind that price has already touched this cash close and reacted from there. Now, touching of cash close in pre-market, that doesn't mean the gap is filled. Gap is filled only in regular trading hours. But keep in mind that that was something that happened. And now we are opening, and what does the market do then? The market just, this is 1 minute chart. The market was just here dancing between pre-market low and cash close. And in this moment here, and they are doing this, poking this cash close, then you have to realize that that same area was testing in pre-market, price go above, then below, then they are testing it from the back side, making a back test of the cash close. That this market is unable to go above cash close, and the sheer inability to go above cash close is our short setup, and that was the first short setup for the day. You could also draw yourself some lines, some small bear flags, whatever that what could help you to look at this and to realize that the market is preparing a down move. And when you are entering here, your stop is just above cash close, because this zone now is of no interest to us. This zone was tested multiple times in the pre-market, and that zone was the zone that provided two short setups on the last trading day before this 3-day pause. So where should we close this trade? This is one of the trades that I have shown on Twitter, and I have closed it here for less than 40 points because I really didn't expect the market to drop 400 points or more from this pre-market high. I was just going from one zone to another, and that was like 2-hour trade from here to here, like, let's say 40 points. And then market starts to move through this zone, which is, if we go back to the 5-minute chart and observe this zone here, it's really not important major zone. It is a minor zone, and we are using minor zones to either gauge strength of the market or as a target. And I used it as a target. And now we are making some kind of a move through this zone. And at that time I have realized that this close of this trade was really a mistake. I should just push my stop lower and capture a bit, locking a bit. And then we have this here, bearish pattern. Then market starts doing this again, and either of these bearish patterns is additional non-zone based, how should I say, opportunity. I did short this. This is another trade that I have shown on Twitter, and then we got this move. Now this move was a dominant move for today. This move here was a clear tell that bears are the ones that are dominating this market. This is a weak market because they lost more than 100 points in just 3 minutes. And not only that, we got something that really doesn't happen so often, and that is the slicing through an important zone, because this was important zone for us. Now look at this at slightly higher time frames. This here zone. This zone. 2 daily lows were here. And what did the market do? It just sliced through it. In a few minutes, just sliced through that zone. That is the signal for us that most likely this zone, which is sliced through, is now going to be a resistance, because it used to be a support, now it's broken, now it's acted as a resistance, and first pullback is a short with targeting this current daily low as an exit. And it was again a decent trade for like almost 50 points with a stop above, just above this zone. So entry could be like on 490, stop like 510, only 20 point stop, and target 40-50 points. By this time, market already, exhausted its usual trading range. But when you see this kind of movement, again, inability to go above this zone, and this was our second short opportunity to short this exactly same zone. So what now? Now we couldn't even expect a lower low and to really close this trade on the next zone. As I said in this morning notes, hard to say when market is exhausted. We are going zone to zone, but we cannot know in advance that the trading range is going to be 400 plus points. So in hindsight, the best possible regular trading hour trade and entry was this first one here, and then you just leave your trade and grab 400 points. But it is, is an utopia to think that a day trader could really grab 400 points in one trade. There are some occasions that you can trade and grab 100, 150, even more than 200 points in a single day trade. But to really capture this, that is very, very hard. So nothing to be sorry about if you caught some points in a couple of trades. Just pick your fights, use these zones, use a good trading location, use Fibonacci also. And this here could be traded again on a short side, because this movement to the downside is usually not the end of the move. The end of the move is more like this, like a flush to some point. So a trader who got short here could, close his trade here, or even to this zone. And you can see that I'm skipping the talk about longs, because when you see like a flush like this, I really don't want to buy this, because I don't know where the market is exhausted, because I can vividly remember the yesterday day, and that the US markets were going upside and upside and upside like 5 or 6%. So where is this market really exhausted? And also these zones with asterisk signs are the zones that wasn't really tested like for more than 2 years. That's why they were carrying this. For tomorrow there will be, these zones are going to be adjusted and more precise. And also about fibs, you can draw fib on the entire move like this. Or for day trades, remember that regular trading hours are always carry more weight than overnight. In America, everything is overnight. They have also pre-market and after hours. So we do that. We have that also. We have pre-market and we have after hour. Past 5:30 p.m. until the 10 p.m. is after hour. So those values that are outside of the cash index, outside of regular trading hours, carry less weight. But they are all, of course, important for us day trades, but they carry less weight. What am I trying to say? That you can also draw fib just on a regular trading hours segment, and that would be it from here to here, because this low was made at 5 p.m. It was regular trading hour. And now observe, where are the fibs? As you can see, the fib, this first fib, 38.2 fib, is on this zone. It's aligned with this zone. So even this could be a small, short trade, because now to get like 30 or 40 points, it's something that's small. But when DAX had an 80-point range, 30 or 40 points was a big catch. Now it is a small catch. So adjust your trading to the volatility. I don't think that tomorrow is going to be a huge day like this. It is the same like on the S&P. 2 back-to-back huge up days are very, very rare. And now they are down like 1.5 or 2%. So this also is for DAX. 2 back-to-back huge down days also are rare, but 2 huge up days are more rare. So for tomorrow we shall see. Bears definitely have the upper hand, and this here now is going to be for tomorrow something like maybe bull bear zone, or something that is very important. For as you can see, it was broken today, and now this zone acts as resistance. So zone around the 500 level should be very important for tomorrow. And that is all for me for this recap video. I wish you good day and good trading.